Hey everyone, excited to be back for this week's edition of Frequently Asked Questions for Commercial Real Estate. In today's video, what I thought I'd do is talk about a concept that's extremely pertinent in investment real estate, and that is what's known as real estate depreciation. Now, before we dive into this video, I would really appreciate if you could like and subscribe to this channel. It really helps with the YouTube algorithm and ensures that more and more people can hear this message and learn about the many facets of commercial real estate. So now that you've done that, you should like it and subscribe below. Let's go ahead and dive right into this video. As a disclaimer, I am not an accountant, so I do not want you to take this as tax advice, but what I wanted to do in this video is explain to you what the concept of real estate depreciation is, and then on the back end, when you sell a property, what occurs as a result of you taking depreciation over a period of time. So, what is real estate depreciation? The logic goes is that it is a decline in value in an asset over time. So as you can imagine, if you were to buy a brand new building, a brandly new minted constructed building, it's naturally going to deteriorate over time, just through normal wear and tear. A building built in 2021 is going to not be in the same condition as a building that was built in 1970, and rightfully so. So lawmakers, when they passed this particular law, allowed real estate investors who are using this building as a rental property to be able to take a small depreciation or deduction on the income produced each and every year to account for this slight depreciation over time. And so when it comes to residential real estate, the depreciation schedule, or the useful life that you can take this deduction over, is 27 and a half years. So as you can imagine, 100% divided by 27 and a half gives you roughly that 3.5%, meaning that you can take about 3.5% of the tax basis each and every year as a deduction. On the commercial end, it has a longer useful life. So you're looking at 39 years. So if you were to take 100% divided by 39, that would give you roughly that in that 2.6% range that you can take as a deduction each and every year off on your tax return. Now, just to be clear, the real estate depreciation is based on your tax basis, meaning that land cannot be depreciated. And rightfully so. A piece of land 50 years from now is likely going to be pretty much the same from a condition standpoint. So if you have $1 million property and $200,000 is the land, you can only take the deduction on the $800,000 of the improvement or the real estate. So you can only take the deduction based on that. So that's a very beneficial strategy for a lot of people because it allows you to take that deduction and offset some of the income produced by that property, thus limiting the amount of taxes you pay on a year-to-year basis. And this is one of the most powerful strategies of owning real estate, is because it is extremely tax favorable for people that are looking to invest their money. Now there is a benefit to doing this, but then also you've got to consider what happens when you eventually sell your piece of property. Every time you take a deduction, this depreciation deduction, it lowers your tax basis, meaning that if you were to buy a property for $1 million in year one, and the basis of that property, based on the building itself, was $800,000, each year that you take a deduction, it lowers that tax basis. Now you may be saying, what exactly does that mean? It means that the difference between the tax basis from when you bought it and when you sell it, that difference, you'll have to eventually pay a recapture tax. What that means is that the federal government is going to collect taxes on that difference that accounts for all the depreciation that you've taken over the life of that particular investment that you've held. Now, this is typically taxed at a ordinary income rate up to 25%, meaning there's a cap of 25% if you make over, the standard, the whatever the tax bracket would be above that. So there is a 25% cap. So as an example of what this recapture tax scenario would look like, let's take an example of you owning a property that the original basis of that property was $1 million. Now, over the course of you owning that commercial property, you sell it, let's say 10 or 15 or 20 years down the line, and the tax basis when you sell it is $600,000, right? The difference between the $1 million and the $600,000 is $400,000 in deductions that you've taken over that lifetime of you owning that particular property. Now, if you're a high income earner that is in a tax bracket above the 25% tax bracket, you'd be capped at paying 25% of that difference in taxes as a recapture tax. So since the difference for that particular scenario was $400,000, you multiply $400,000 by $25,000, and you get your tax due on the sale as associated to recapture, which is $100,000. Now, you may think this is a significant amount of money, and you're right. It is a significant amount of money, and that's why a lot of people, when they're looking to sell commercial property, perform something along the lines of a 1031 exchange to defer those taxes to a future date down the line. And I believe I had a video where I talked about this, and I'll go ahead and put it on in the top right hand corner for you to be able to reference it. But that is also a phenomenal strategy that a lot of investors use in order to kick the can down the road and not have to pay taxes whenever they sell a commercial property. So I hope you gained some value from this video. I hope you now understand what real estate depreciation is and how it can benefit you as a real estate investor. If you're looking to invest in commercial property here, either in Kentucky, Indiana, Ohio, be happy to help you identify properties that could fit your needs. I'm a commercial real estate agent in town. Feel free to reach out to me. My number is 502-536-7315, or you can reach me via email at raphael@grisantigroup.com. Also, again, it would really appreciate if you could like and subscribe to this channel, because it really helps with the YouTube algorithm and ensures more and more people can hear this message and really become more educated about the commercial real estate industry. So thank you again for your time. We'll see you guys next time.